Now let's take a look at the bigger picture. Pete Najarian's with us, co-owner at Market Rebellion. Pete Najarian, great to see you. I'm so glad you're with us today. What stands out as we have the Powell headlines breaking? We're ending the month. We had the 50 basis points and some records for stocks last week. What's on your mind?
Well, I think when you look at September, you've just got to be shocked at all of the different things that were going on throughout the month. And if you go back 3 weeks ago, we were looking at CPI, then we were looking at PPI, and there was a huge pause in the markets. It seems like the data has truly taken over the trump card, even over earnings. Now, we're a couple of weeks away from getting earnings season getting going again. But if you just go back to that CPI, PPI, obviously we had that huge reversal move after we flipped around. And we've been off to the races. But it was 3 days of being very silent in the options market. We were trading about 40 million contracts a day. We actually averaged so far about 48 million per day for the year and for September. And it was interesting to watch because suddenly after the 40 million and everybody all of a sudden got CPI, PPI in front of them, the volume came right back. And people got very excited again, and that lifted up the markets once again. But then the next week, it was about the Fed. And then the next week, there's always something about the next week. And we've been very much on pause for a while. The first couple of days, and as a matter of fact, today's a great example of that. It seems a little bit quiet out there right now. It's the end of September. It's been a pretty amazing September, especially when you look across and you see where the different lifts were coming from. Obviously, the Chinese cutting rates, that was another piece of the puzzle. And it just seems like there's some sort of a category that's going to be very macro. And we used to look past that a little bit. We're no longer doing that. That is front and center. And then, of course, anytime you hear Powell talking like we're talking about now, that is something that's going to be very market moving.
Yeah, without a doubt. I mean, when you go back to August, on August 5th, we had the Dow down over 1,000 points. I mean, you know, the question was there further to go to the downside? But people stepped in and bought, even though there wasn't clear capitulation, there wasn't clear panic or heavy volume. People stepped in and bought. And is that your feeling that each time we pull back, people will step in and buy? Would you buy the dips? It
sure seems like that. Yeah, I think that is the trend. I mean, we've been watching this, as you pointed out. I mean, August 5th is a great one to go back to. You can even go back into September where we had that big flip around as well. And then suddenly we started lurching back up to the upside. It seems like one of the ways that you can keep an eye on this, at least I will tell you, is the volatility index. Because on the most recent drops that we have seen, we didn't see that spike in volatility that you'd normally be looking for. We did get it back in August, yes. But in September, when we had some of these moves that were to the downside, we never really saw the volatility get over much more than, I don't think it got even over 22. And that was a little bit surprising because the markets felt like everybody was trying to put their palms out. They were selling. They wanted to get out. And the next thing you know, we flipped completely around throughout the same day. And that, I think, is where volatility really did step up because we didn't get that big spike to maybe 28 or 30. Right. We got a spike towards 22. And now here we find ourselves between 15.5 and 17.5. That's kind of the new range. And it's something where people feel certain comfort, it seems.
Yeah, understood. And I know you're really a big fan of options. You think everybody should be using options. I think a lot of people are still buy low, sell high the old way, but you're a big believer in using options. You can explain that along the way. But I do want to get to your ideas on what might work in this market. You talked about power, nuclear power, data centers, and the other would be financials and investment banking. So let's hit the data centers and power, that side of it first. You have a few names that you're featuring. I'd like to hear why you think that's a win.
Well, when we look ahead and we talk about NVIDIA every day. Well, part of that talk should also be, all right, well, what is that going to do to demands on the system when people need power? This is going to be a bigger jump than we have seen in a very, very long time when it comes to this jump for power. And I think a lot of that has to do with how are we going to get that power generation? It can't possibly come just from solar and wind. They aren't efficient enough. But nuclear is certainly an area that everybody's talking about. I think I heard you guys talking about this a little bit as well. This is a very, very hot topic, and we are seeing more and more of this coming to pass. When you look at CEG or any of these various names that are in there, you could go to the power sources themselves. You could go over to the uranium side itself. Or you could just even go straight towards the CCJs of the world, the Kamikos of the world that are out there mining all of this. It's an amazing move that we are seeing right now. That is where people are going for their energy. The demands are going to be there. We can't keep up with the present that we've got. You can add in a little bit of the natural gas side of it as well. But I think if you look at nuclear, that is the direction that we are going, whether you like it or not. I'm not trying to be political. I'm just saying with the demands that we have, that is the answer, and that is the answer that people are going for. Take a look at Vistra for just one example. Do you know that, and a lot of people probably don't follow that name, you probably feel like it's a little bit boring. It is not, and it's second behind NVIDIA right now in terms of the performance in the S&P. So it gives you a little bit of an idea that, yes, there is that magnificent seven, if you want to say that. I don't believe in that term. There's a lot of others out there that are competing, and they're part of this move as well.
Yeah, I mean, you mentioned Vistra, you mentioned Constellation, you have the Uranium ETF, URA, and CCG. Those are the names to follow when it comes to nuclear power. And yes, you're absolutely right. We've talked a lot about nuclear power and even trying to do it with nat gas and CO2 to provide power. I had a very interesting CEO on BKV last week who had the IPO. And Vistra was a big mover last week, had some huge moves. So if people haven't looked at it, they better start paying attention. How about financials? Pete, I mean, this is something that you're also keeping an eye on. Investment banking, is that going to work better going forward?
I think so. We had a great first half of the year. Investment banking was really what helped carry a lot of these various financials to the upside. You look at somebody like Goldman Sachs and Morgan Stanley, Bank of America, Citigroup, you can go through down the list. But those that are involved in investment banking right now, I've been talking about this for multiple months. I continue to bang the table on this is the place to be. And I think it's because of the fact that the profits that they're able to gather from this is absolutely astronomical. I think deals are still going to be out there. There's so many different pieces of the investment banking side, but I can tell you it is a huge performance side of what we're looking at when we look at Goldman or JP Morgan or any of these various names. I like those names a lot. I think that there are reasons I can understand why people would say, well, these have run, they don't have much more room. But I think because of the investment banking piece, they do still have room, especially those that are very, very deep into it. And we're going to see more and more deals happening, I think, over the next couple of quarters.
Yeah. Are you worried, just quickly, we're out of time, but the port strike potentially for the East Coast and the Gulf, could this be monumental, or you think it's just going to be quick and done, or what?
I hope that it's quick and done. I don't know that I think it's going to be quick and done. This is something where I think they seem to be digging in their heels. And these are the kinds of things that really, when they do pop up, we've got to be very aware of what's going on and what some of that lag time is going to look like, all of that. Hopefully we can get this done. I don't know how stuck into the ground that the folks are on either side, but I'm hoping that we can get some sort of a deal done. This affects all of us. This isn't just affecting the rich or the middle class. This affects all of us. So we really need to have this get done.
Yeah, JP Morgan saying $3.8 billion to $4.5 billion daily. That's what it's going to cost for everything from retail to pharma, auto parts, produce, etc. Pete Najarian, thank you. We'll keep an eye on that story. And also Powell, who's speaking throughout this hour. Thank you. Pete Najarian, great to see you from Market Rebellion.